Hi there, Shingirai here again with another update on portfolio performance over the past week. On a one-week basis, all 10 of the CBAM portfolios outperformed their respective benchmarks with returns ranging from minus 0.18% for portfolio number 1 up to 1.07% for CBAM portfolio number 5 V2. It was a relatively risk-on week, especially with tailwinds for the Chinese equity markets on the news of some relaxation of some regulatory rules around the listing of gaming companies or the release of new games for gaming companies, and also some positive or dovish signaling from the Chinese central bank, and that would see a very positive week for China and some reopening of previously closed regions of China such as Shanghai under the zero tolerance COVID policy. That would see Baillie Gifford be the top performer on the one-week basis, alongside MSCI China and Threadneedle China Opportunities, all up more than 5.5% on the week. In terms of detractors from performance, we continue to see weakness there for Japanese equity amid stories of a weaker yen, where the Bank of Japan hasn't had as much space to sort of raise their interest rates alongside their developed market peers, and due to slowing economic growth. And that would see JP Morgan be the bottom performer on the 1 week, down 1.89%. Alongside Fidelity, Japan also down 1.4%. On a quarter-to-date basis, 1 out of 10 of the CBAM portfolios outperformed their respective benchmarks, despite the tightening of the spread that we've obviously seen over the past week, with the strong performance on the portfolios over the past week or two. And that would see on a quarter-to-date strong performance again from China, as investors begin to see relatively cheaper valuations for the Chinese equity market. And again, that would see HSBC, MSCI China, Threadneedle Chinese Opportunities, and Baillie Gifford China being the top 3 performers, and most notably here MSCI China from HSBC up 7.58%. With the war in Ukraine continuing to rage on, and obviously being closer, the European equity region has been more affected and more reliant on import of grain and energy from Russia and Ukraine, and that would see Allianz European Continental down 10.69%, alongside Baillie Gifford European down minus 10.68% on a quarter-to-date basis. The relatively risk-on nature of the quarter, also alongside the hiking of interest rates from central bankers, would see gold be less attractive as an non-interest bearing asset class, and that would just reflect there in terms of the performance of 9-to-1 global gold, down 10.32% on the quarter.